Hey folks, so one of the big debates out there right now, it's been out there for quite a while now, is, how long will this inflationary picture in the economy persist? And so when you translate that into sort of positioning in the market, and I'm not focused on the equity market here today, um, the question comes down to, is this an environment where you want to be more focused on value stocks versus growth stocks, which the latter of which tend to do a bit worse when interest rate go up because of the discounting of future cash flows at a higher rate means you have a lower net present value. So one way we're looking at the world right now, or one way of looking at the world right now, which is our view, is that we actually think that even though the bond market is pricing in 4 to 5 rate hikes here for 2022, a lot of investors are actually not really believing that just yet when you talk to a lot of funds. I actually think even though the Fed may not hike as much as the market thinks, they could hike more than what fund managers think. And so what that basically means is that we want to probably be more in value stocks. And there's a very simple way of being exposed to that through a simple ETF. So I'm going to go through and show you guys a couple of charts. So first of all, just to be clear about this, if we use our market rover, which is our trend following tool, wherever you want to be on the right side of the market, you look at value stocks, which the ETF for that, I should say, the ETF is VTV, so Victor, Theodore, Victor, is the Vanguard Value Stocks ETF. And the market rover declared this one bullish trend back in late 2020. It's up modestly then, well actually quite nicely, 35%. But if you compare that to growth stocks, the ETF for that, the Vanguard ETF for that is VUG. You can see that even though that had a nice bullish run over time, it actually just recently went neutral. That's this black background here. So there's a big divergence going on here. So the market was telling us, listen, it's good to be in value, or it's okay to be in value, but growth stocks are certainly no longer be the place to be for right now. Now let's go into the actual charts, and I want to just give you a little bit of perspective on this when you do a relative chart. So first of all, let's look at the absolute chart in terms of the VTV, the one that we want to be in, more likely value stocks acting well, holding its 200-day moving averages and things like that. And VUG, the growth one, is actually snapping pretty much all the support you can possibly imagine. Now, immediate term, we could see a bit of bouncing around in this, and I actually do think immediate term here as of January 31st, we may be somewhat oversold in growth, but if you look at it beyond that through a sort of a multi-month lens, I think there's more downside there in growth, particularly on a relative basis. So which gets me to the chart I really want to show you, which is if you take the value stocks, ETF, VTV, and you divide it by VUG, which is the growth ETF, you get a chart that looks like this. Now this one's important to make it a weekly chart, meaning bigger picture, and zoom out. And what you can see is just purely optically, from a technical perspective, is that looks to me like we've put it in double bottom. And we could see plenty of relative strength in value stocks versus growth for the foreseeable future. Maybe for the rest of 2022, maybe for multiple years. Now, what could unravel this trade? What could unravel it is if the Fed starts to come in giving you all sorts of bazookas again, which could happen, right? Maybe in the second half of this year, it's possible. That would probably unravel the trading. But I think for right now, again, immediate term, I do think growth is probably a bit oversold. Again, I mean, I'm talking about immediate term, I'm talking about like next few days, maybe a couple of weeks or so. But I think beyond that, through a multi-month lens, my money's better positioned in the value stocks, again, because I do think that inflation, well, it's not going to go away right away. I think the bond market probably has it right, and the investment fund manager crowd may have to wake up to that sooner rather than later, that the Fed will hike rates maybe a bit more than they think, and I think that should speak for value. So VTV is the ETF that we want to be in here. If one believes that value has a bit more relative strength than growth. Hope it helps. We'll see you soon.